Just over a half hour till the final opening bell of the week on Wall Street. But, Gunjan, there is a Monday coming with there. That's
holiday. Oh, I thought you were going to say the market open.
No, I want to say there's a holiday coming. No, that's the good part of it. Gunjan Banerjee is lead writer for the Wall Street Journal's live markets coverage. She's also a CNBC contributor. Let's talk about the markets. We just had a really weird segment. I don't know if you were watching it, Gunjan. I have never done this chat GPT type stuff, but I'm afraid of the future suddenly. And it's not just about the stock market. Tell me where we are at this point in time, in your view. We were doing well in 2023. Now I'm questioning everything. Should I?
What a strange start to the year it's been. Bitcoin is back above 25,000. We've seen a frenzy in the options market that's reminiscent of what we saw in 2020, 2021. Some of the most speculative corners of the market are soaring. And I've had traders say to me, look, this feels like the pandemic market again of 2020. But the main difference is that bond yields are much higher this time around. And I think that's making a lot of investors question this rally because as we saw last year when bond yields rose, that weighed on the stock market. And that divergence has kind of broken down lately. And I think that's one of the biggest things to watch in trading today and after the holiday weekend is how is the stock market reacting to those higher bond yields? Or is it coming to terms with that? And maybe we do see a little bit more of a sell-off.
There's at 330 or 340, and you say, well, yeah, we could go back to 4%. That's one thing when you say it there. But when you're at 390 or getting close to 4, then you start thinking maybe it could go to 4.5. Maybe it could go to 5. And that might be a whole new issue for the market to try to digest at this point. Is that where we are?
Definitely. Joe, look, I think this concept of a Fed pivot, which really seemed to save the market early in the year, it's gone poof. Investors have repriced their expectations of that terminal rate significantly. And I think this week was just such a big wake-up call for investors. When you look at, we got 2 inflation data releases that were both hotter than expected. And I think that's really quashing some of those hopes that, inflation will just go down in this super even straight line. And, that had buttressed the market earlier in the year. And I think a lot of people are questioning that right now. And that's what we saw in trading yesterday. And, ahead of the opening bell, it looks like what we're seeing again today with the NASDAQ underperforming some of those other indexes.
We really are held hostage now by the markets are by the economic backdrop. We got, I guess, a jobs number coming up soon again. I'm just not that soon, but before we'll get inflation numbers before the next Fed meeting, and those are going to be, we're going to be riveted to those, Gunjan, after the last month.
Totally. I mean, this week was a little bit weird in that we saw less than a 0.1% move in the S&P 500 after that inflation report. But then PPI yesterday was such a negative surprise. Yeah. So I do think you're going to have investors clinging to every jobs report, clinging to every inflation data release.